Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to Season 7 of Talking with Traders. We're now into the fourth year of this podcast since it started in early 2020. Once again, IG have come on board as our sponsor for this season. We are truly privileged and grateful to have such a global leader in CFD trading as our sponsor. Over the coming weeks, I'll be interviewing various guests from around the globe on the topic of trading. Some will be follow-ups with past guests, and some will be new guests. The idea behind this podcast is that you get a variety of views from a broad spectrum of market professionals. None of what you hear in these episodes is intended to be financial advice, but it is intended to get you thinking about how you might be able to apply what you hear here into your own trading and investing. Please remember to subscribe to this podcast in your favorite podcast app. That way you'll be notified when new episodes are released. Once again, thank you to IG for funding and sponsoring this podcast into its fourth year. And thank you, listeners, for tuning in. Please enjoy Season 7 of Talking with Traders. Welcome back to another episode of Talking with Traders. And this one I've really been looking forward to. My guest today is David Hale. He is the author of this book. If you're watching the YouTube video of the podcast, you can see it there in the image now. It's called Cash Rules, Reminiscences of a Day Trader. A fascinating book to read. David, I listened to you on another podcast talking about the book, and that prompted me to go out and buy the book. I got it off Amazon, and I loved reading it. I couldn't put it down. It's just such a great book, but such a raw, honest account of trading. So welcome to the podcast, first of all. And just tell us, I mean, this is a conversation about your story. Tell us the backstory, how you got into trading and the path that your career has followed.
Well, thanks for having me. Again, it's good to chat. You know, I always love talking trading and sharing my story and seeing if I can help any traders out there. The story originally started, again, at first, before trading, I was always into risk and the thrill and that dopamine hit that comes with it, and I mainly got that through gambling. So even as a kid, and then as a teenager, and then as a young adult, I was into gambling, whether it was casinos or sports betting or horse racing. I was, that was my deal. A little strange for a kid, but that's I guess that's that's the way I'm wired. So that was kind of the start, and I kind of want to be a professional gambler, but I quickly realized that was near to impossible. Although it is possible. Again, there are people out there. And then after college, I kind of, this was back in kind of the internet boom, tech bubble, the first tech bubble, and day trading was a big thing. And I heard about that, and I was like, oh wow, this seems even better than gambling. I first started as a sketchy stockbroker, kind of like a boiler room style. And after that, I was fortunate enough to get a job at a prop firm in Austin, Texas. And again, as soon as I started, I knew this was a job, this was a profession for me. Of course, and again, I say unfortunately, I've always kind of been addicted to that rush and the the adrenaline. It's not necessarily a good thing, and we can talk later about that, but yeah, I just love the feel, and I love the job where everything's based on performance, and just the competitiveness, and I just kind of fell in love with it. And then once I got started, it's it's now 23 years. I'm still standing. It's been a wild ride since, but that's kind of how I got into it.
Yeah, amazing. You're clearly a competitive guy from a very young age, right? And as you say, you had that gambling streak. You loved the gambling. You loved the opportunity, I suppose, risk seeking, all sort of characteristics, I suppose, that you want in a trader, but at the same time, also characteristics that can take you off course if you don't rein in those characteristics to some extent, which certainly in the book you talk about. But what actually inspired you to write the book? Because, I mean, most authors write, they never do it for the money. It's just for some sort of self-actualization. And it's a story of your life and your experience as a trader. And like I said in the intro, it's very raw, it's very real. And it's also, it kind of almost reads like a cautionary tale, because you've really been through the ringer in your career as a trader.
Yeah, well, you're right. That was perfect words. Cautionary tale. That's kind of what I wanted to be. Yeah, I'm not a writer. I'm not a writer. I'm not a salesman. I'm a trader, and I was kind of inspired to write the book. I just, I'm like you. I love any trading books. I spend all my time on, whether it's blogs or Twitter or whatever it is. I love trading content, let's say. And don't get me wrong, there are a lot of good books out there, and there's plenty that I recommend. But I didn't, I wasn't seeing, anything that really, painted trading as I had seen it. And I'd seen the other traders around, kind of, the way they viewed and looked at trading. And yeah, the two main things, like you said, I wanted an honest account of trading. I wanted people to know what it's really like, the pain, the ups and downs. Unfortunately, most of the stuff is, pictures of Lamborghinis and guys that have fancy cars, and of course that's the way it is, because they're trying to sell something. Yeah, it's that's the trading's, it's the way to easy riches, but it's of course it's not. And there's plenty of 90, let's say 90+% fail, and most are okay. Most live. And it can be a good thing. Even if you fail at trading, it's it can leave you better off for it. But a lot of times it doesn't. People lose all their savings. The psychological side of it really affects them. I write. I've been through. I'd say I've been through hell. But there's guys, been through a lot worse than I have, and I write about that in the book. So I want it as a cautionary tale. Of course, it's not all doom and gloom. I love trade. I'm passionate about it. I want to share that love in the book. So, but I want to be cautionary. I wanted to show that downside, and also like prepare traders what can happen and how to deal with that. This is not, my tale is definitely precautionary. It's like, I know how to make money. I know how to be a good trader, but again, I've let myself down a lot of times. So I wanted this, like, not do as I do, like do as I say type book.
Yeah.
So I wanted that, and then the second part is this glitches, this kind of what I call this method of trading I use, and pretty much all the traders I've been around have used, and I've been fortunate to be around a lot of really good traders. And I would say the style or the method that we've made the vast bulk of our profits well, I say rarely isn't mentioned in books and on Twitter. Really, it's really secretive, and it's secretive for a reason. But I kind of wanted to spread this, the word of the glitches.
Yeah. And
that's another big reason I wrote the book, because again, most of these books are filled with fancy charts or fundamental analysis and speculation and stuff like that. But again, that's not kind of the trading I've seen, and that's not where I think the edge is. And I say think because I've got my data to back that up, and pretty much every other trader I've known's data to back that up. So that's the other reason I wrote the book. And it was a good break from trading. Again, when the market's so, I'm only trading. I pick my spots. I've become more disciplined. Sometimes I'm working 1, 2, 3 hours a week. Sometimes not. If my strategy's not there, I'm not trading. So that leaves a lot of free time. So I figured that was a good use of my free time. To write this book, and it's a good a little bit of creativity, which is seldom sound. Trading's rigid. It's mechanical. Writing's a little different. So that's why the book. It took me 5 years, but it's here, and I just want to get it out. And get a conversation started on some of these issues.
Yeah, cool. Yeah, so I mean, as we said, it is a cautionary tale, but at the same time, it's also kind of a little bit of a story of hope, I suppose, because as much as you've been through some tough times, at the end of the book does reveal that you've actually managed to pull yourself out of a very, very big financial and emotional hole, and you're on the right side of the market nowadays from reading the book. But we'll get to that. But I mean, I want to just go back a little bit. You mentioned that you started out in a stockbroking firm, and that it sounded like it was a bit of like a boiler room type of environment where you had to go through the phone book and phone old grannies and elderly people to try and sell them shares which they shouldn't be buying, and that didn't sit well with you morally, so you got out of there quite quickly. And then you said that you went into a prop firm, and it was clear from reading the book, that you were absolutely besotted with the idea of the prop firm once you walked in there, and you talked about the swearing and the shouting and just the testosterone of guys, making money in a dealing room. Just tell us a little bit about that, because I think that is also, the appeal to a lot of people when it comes to trading. Just add a little bit of color to that experience if you can.
Yeah, this was this is over 23 years ago, and things were a little different back then. It was a little wild. Now it's as prop and trade in general has become more quantitative, and it's a lot of tech guys, and it's back then it was more, it wasn't necessarily, trading floor pits, but it was wild. It was bunch of young guys in their, Hawaiian shirts and flip-flops and, making crazy amount of money. It was a wild environment. I loved it. It was competitive, it was gladiatorial, and it was, you're trying to be the top dog in this office, and I loved it. Like I said, I loved it. Unfortunately, there wasn't too much training back then. Things have changed, but they just kind of threw you in this, in the ring, and the strong survived. And yeah, I love that part of it, and that's still what I know now. People are still talking about the big thing is prop firms and funding challenges and all this. Again. And it's a totally different. When I hear prop firms, that's what I think about. And again, I know there's still prop firms like that. Prop firm is a trading floor. It's traders together. It's teamwork. Hopefully a training program, but a group, and successful traders, of course, is a key. So again, I was fortunate enough to get my start there, and I don't think I would have. Of course, I wouldn't have made it. I'm almost certain I wouldn't have made it if I didn't have that. Even though I didn't have too much training, I knew there was other guys in this office making money. So I'd look at these guys, go, okay, they can do it, I can do it, and you even if they're not sharing your secrets, you kind of, you gradually find out what they're doing. And that success, it's like, I think kind of call it like a benevolent virus. Even if, the guy, how it is, the guy sitting next to you is making money. Even if you don't know what they're doing or they're not sharing ideas, it kind of seeps over to you, and you trade better. And that's probably the main benefit of being one of these prop firms. And I'd still recommend, if any traders out there, if you can get into one of these prop firms. And again, when I say prop firm, I'm talking about a trading floor and structure, and that's a proper prop firm.
Yeah.
That's the best way to get an education, and it's really going to give you, I don't want to say the only way to survive or make it, but it's definitely the best way to survive in this game.
Yeah. I suppose it's that, like you said, you kind of, the information or the flow or the vibe seeps over. You kind of, through, I suppose, a process of osmosis, you learn, but you also get to feel that buzz and feel the excitement. But I mean, prop firms, they can have ups and downs, right? I mean, I know that you're big on prop firms and the type of prop firm that you're referring to. Obviously, as you say, it's like a dealing floor where a lot of guys at desks with computers, all working in the same space, sharing information, so that there's that sort of exchange of information. It's not as you say, like the kind of prop firms or these funding firms that are now being spoken about today, it's different. It's not the same. But to that extent, I mean, there can, I guess, also be some pitfalls to a prop firm environment. I don't know if you'd agree. Maybe groupthink, or I don't know. Do you have an opinion on that?
Yeah, I mean, generally, I think it's a good thing, but your first point again, make sure a lot of these new prop firms. It's like it's for me, it's a totally new. I don't even think they should be calling prop firms. These funding challenges, and again, that's only do it if you can be in a trading floor. And yeah, so I guess the downfalls are, when the big one, I was at this great prop firm and I left to another one, which was it was a different type of structure because of the payout. That's a big thing. A lot of traders get caught up in that. If you're trading your own funds, you're keeping, let's say 100% or close to 100% of your profits. At a prop firm, you're giving a huge chunk to this prop firm, which, it can be hard to swallow, especially if you believe I have these strategies, I could do those on my own. Why am I splitting it with, this prop firm? And that's kind of the issues I've had in the past. And yeah, that's definitely an argument that could be made. And another thing is kind of, depends how the prop firm's structured. Like the prop firm I was originally in, it was like a job. You're expected to be there. There was structure. It was, and a lot of people, and again, I think looking back, I kind of thrived on that. I needed that structure, but a lot of people get into trading because it gives them independence. It gives them freedom. So, they don't want to necessarily be locked down at a company where they have to go to this office every day and, answer to a boss and stuff like that. So, that's another reason maybe just kind of to do it on your own. But those are arguments, but ultimately I would say, the benefits outweigh the cons.
Okay. All right. Yeah. Good to hear. Good to hear. And you mentioned a training program, and a lot of, you look for a prop firm that's got some sort of a training program. When you started out in the prop firms that you were at, did they have that? Did they have like a training program to sort of at least show you the ropes, teach you a little bit about trading? Or was it very much like
when I
trial and
started
error?
when I started, it was this firm I was at was going through kind of a, let's say, a transitionary period. And we had our manager, our pit boss, we call him, is just this old school. I mean, he was old school, the old floor trader, and he would just, he'd come up to you and just scream and yell, and there's tears coming, down from some of these traders. It was, it was a rough environment. It wasn't very structured, let's say. But it was not too long after I started this firm I was at, had a structured trading program. And a lot of them do. And that's the key, is if you're a new trader, you need, even if they have a structured, don't get me wrong, even if they have a structured trading program, a lot of traders are very secretive with their strategies, especially have a good strategy. So, it's not like a training program isn't necessarily, here's all the golden secrets. Now just hit this button and you're going to make a lot of money. But a good training program at least sets you on the right path. And yeah, I think, if you're looking for a prop firm, make sure it has that structure, has that training program. And I think most prop firms, most good ones would have that. But again, even if it doesn't, you don't have to be a prop firm. You could find a group of traders and set up an office. I think the benefits are just like the osmosis, being around traders, and then working as a team, or just sharing ideas. If you share a strategy with another trader, then they're likely to share their insight and strategies. And that ultimately that's the best way to do it. And as I write in the book, most of the big strategies and the big money is made from a strategy that you get from another trader, or I found on YouTube or something like that. So and that's another lesson is, don't be stubborn. And again, that's a big thing of me, is don't be stubborn. The best way to, find a strategy or make money is to, let's say, steal a strategy, or, share strategies or borrow strategies. So
Yeah.
that's a huge benefit, again, of working in one of these offices.
Yeah. Okay, cool. I just want to talk about your story a bit though, because obviously in the book you highlight this. You started in a prop firm, went through a major high, you're doing very well, and then at somewhere along the way it went wrong. Just so let's start at the beginning. I mean, you talk about a glitches strategy, trading glitches. Just tell us what that means in more detail, and then just lead us up to that point where you had, the peak in your career, let's say, before the big downfall, and then we'll talk about that in a minute.
Yeah, well, when I started this prop firm, again, I've described it as a pretty wild place, and it was wild. And I was an ex-gambler, and I like the adrenaline. So I got in there, and I was just basically gambling. And gambling and trading are two different things.
Yeah.
If you don't have, trading is as simple as if you have a strategy with edge, and then you execute it. Without the strategy or without the execution, you are gambling. And I didn't have either. I was just hitting buttons and hoping this stock goes up, and I of course I managed to lose, I think, 40,000 in a few months. And then I quickly, I right before I got fired, I was like, okay, get your act in order. And so the main things was, of course, cutting my losers. I'm disciplined,
Yeah.
that stopped the bleeding.
Yeah.
And then I turned to scalping, which again I'm still doing, short-term trading, using the order book and using some of these tools. And I found these, in the book I call these glitch trades. And I think I call glitches, glitches are inefficiencies, they're malfunctions, they're arbitrage. They're basically something, when the market's broken, or free money, or it was something that shouldn't be there. And it doesn't rely on speculation, or it's not necessarily technical analysis. It's just mechanical, something's mispriced. It's very different from most of the trading out there. And really the first glitch strategy I used, which kind of turned things around, was just as simple as I saw a lag between a certain stock, which was 3M. I'm sure Triple M, which is a big American conglomerate, and it's part of the S&P and it's part of the Dow. And I just saw that the stock, of course, it went with the S&P or the SPY, but there was a lag. So the S&P would shoot up and 3M then would shoot up, but there was maybe a couple of seconds lag. And it's like, okay, well, this just seems to make sense. So every time the S&P shot up, quickly buy 3M, and then scalp, quickly cover, scalp out. And if it goes down, do the same thing. And I just started doing that. And it kind of worked with a couple other stocks too. But simple video game, I say it's more like a video game. There's no, it's not necessarily traded. I'm not I'm not trying to be Warren Buffett or some financial wizard. So it was a simple kind of strategy like that. So I just sit there all day and, watch S&P and bang, bang, just, speed was a big component of it. And, do that all day. And I think within a year, I'd, gone through the debt, and I made almost a 6-figure month within a year, which, for me, I was a young 20, my early 20s was just crazy.
Amazing.
And, I just thought I was I was on top of the world. It was, and I'm sure this feeling is, when you kind of make it as a trader, the money's great, but it's just that sense of achievement, because you know how tough this business is, how brutal it is. And I like I said, I felt on top of the world, and I was going to be making these big checks every month, and this was it. It was probably the best time of my life. And the market, but also the market was forgiving back then. There was volatility, and the market was more fragmented. There was more of these glitches. It was inefficiencies. The bots hadn't, totally infiltrated markets and, made everything, really tough. And so, and then for a few years, it was good. I was making money. I was at, my dream house, I had cars. I, living the life that I dream of, and, by my mid-20s. And then, that kind of happened. And then I think my first, around, what was this, around, once my kind of 30s hit, the volatility dried up. I was, I managed my money poorly, and I found myself dead broke. And, long story, I was, by then I'd moved to London. and I had a family, and I still was like, just draining through savings, living this, expensive lifestyle. And all of a sudden, but I had that confidence, like, oh, I made money before. It's good. Next month, I'm going to do it next month. But I was trading poorly. I had no discipline. My strategies were awful. I was a mess. And of course, I didn't make money. And then, it was kind of all of a sudden, just one day, I was keeping most of this from my wife. I didn't want her to worry. And, I was certain I was going to dig out of this hole. So I was basically like, okay, by the way, we're basically dead broke. We've got a couple months of savings, pack the bags. And she was a Polish woman. And I was like, we're going to Poland because it's cheap. And, that's really our only hope. So, I went from, this dream life to back in, to living in Poland with my mother-in-law. And then, the volatility came back and I made it a little back. And then this was maybe 3 or 4 years ago, as you read, like it happened again. I was managed my money poorly. The volatility in the market dried up, and bang, I was flat on my face again. Dead broke. Wife's gone. No hope, no strategies. Living in Poland, I had to live with my dad. I mean, it's embarrassing to say all this, but again, this is what I want traders to know. This is what can happen and does happen. If you don't plan right, if you don't have a backup plan. And I, most of my career, I didn't have a backup plan. So yeah, I was 40 years old and I found myself, teaching English for $10 an hour. So I'd gone from making, 6 figures in a month to $10 an hour. So that's what happened.
Yeah.
Again, this is an extreme story. I think most successful traders are smarter with their money, and their lifestyles are less volatile. But that's what happened.
Yeah. I mean, that part where it all went wrong is what I want to delve into a little bit. I mean, I know you say it's embarrassing. I just think I respect you for telling the story and writing a book about it and actually being honest about it, because it's so refreshing, especially in a world where I think there's a lot of, bullshit being spoken about trading and how easy it is and how it's like this easy road to riches. I mean, it's not. You and I both know that, and any trader worth his salt knows that. So it is refreshing to get a proper, honest, raw account of somebody who's really been through the mill like you have. But I mean, when it went wrong, you mentioned no discipline, etc., etc. But I mean, what else? It doesn't happen overnight, right? Things obviously started to kind of go wrong gradually for you. I mean, are you able to sort of pinpoint particular things that you should have done differently? I guess it always comes back to risk management, right? But yeah. From your perspective, what went wrong?
Well, again, I guess the first lesson is, and as as a trader, when you make the bulk of your money in certain periods, and I was fortunate enough to be around in 2008. And 2008, offered just amazing opportunities. There was so much money to be made. The volatility was crazy. And I actually, my brother's a professional trader, and I know other traders. And I was in London this time, kind of trading remotely. So that was one mistake, not being in a an office around other traders when all this happened. But again, I did okay. I had, my best trade, my best results in my career, but I didn't, I should have been, I was making 6 figures a month when I should have, the guys in my old office making 7 and 8 figures a month.
Wow.
I should have, take advantage of it when it's really good. I should have, if I had that huge nest egg, of course, I wouldn't have found myself in that. So that was, kind of the first lesson. And that, like I said, the reason I didn't take advantage of as much as I should have is I wasn't in the right environment. I should have been in an office, and that's a lesson. And I was stubborn. Again, even though I was in this office, my brother and these other traders shared these amazing strategies with me. And I was kind of like, I'll do it my own way. I don't like that style. This is, I'm this type of trader. And that's completely wrong. You go where the edge is. If someone is fortunate enough to hand you an amazing strategy, you take it. if there's opportunity in this market or doing this strategy and there's tons of edge, you have to do it. You can't be stubborn. There's no prizes for, doing it originality or doing it your own way. In trading, you're judged on your P&L. Again, oh, wow, I'm a good trader. I made this strategy up, or I do it this way. Nah, it doesn't. There's guys in this Texas office who made 10 times as much as me, and they were terrible traders. They never made money before, but they were smart enough to hit these strategies. When they were really good. So that was the first thing that got me in trouble: stubbornness and not taking advantage of it. And then for the next, let's say, 10 years. We went from this huge volatile market, and then all of a sudden just kind of died down. And a good trader during when this happens, you take your foot off the accelerator, you evaluate the landscape, you change your strategies, you adapt to the market. You maybe look for different markets, you look for this, you do different stuff. And I was, again, more stubborn, and was kind of stuck to these strategies that weren't necessarily working. And my discipline wasn't there. My risk management probably was out of whack, like not cutting my losers fast enough, trading when I shouldn't be, trading strategies that I didn't have edge, gambling, let's say, like not, if I didn't have a strategy with edge and I wasn't executing it, I was gambling, and gambling will, lead to losses. So, I of course, during those 10 years, maybe I had, I had a year when I make money. I wasn't necessarily losing money, but I was just kind of on a steady downward slope.
Right.
The market was getting tougher. The volatility was depressing. I was probably becoming a worse trader. And, I just kind of, over those 10 years, just, living, and I wasn't adapting my lifestyle. I was living in London, living this, this crazy lifestyle. So, I just drain these profits, and then, before I know it, they get smaller and smaller and smaller. And I had no backup plan. I couldn't, go get a job. All I knew how to do was play this, glorified video game that I was doing, scalping and doing these glitches. It's not, it's not necessarily a valuable tool in the work world. So I didn't have a, escape route, which again is another lesson. Make sure you have a backup plan, whether it's a huge, nest egg or skills or being able to get a job. I had none of that. So, it just kind of slowly, and then bang,
Yeah. Okay. So it's,
and then unfortunately, when when that bang happened, it's like, okay, that wakes me up, but it's, nobody wants to go through the,
Yeah. It's interesting that you say, though, that like that lifestyle, I think it's quite a common thing. People's lifestyles are slow to adapt. You get into a particular type of lifestyle and you kind of get used to that, and then it's very hard to dial it down if you're living it up and you become used to that kind of lifestyle. And I guess that is important, as you say. It's a good lesson for those listening to this to know, because there are, in trading, I've also found it in my career, you do go through ups and downs. There are times where you do very well, and then there are times where it's hard, and I think you alluded to it. Your profits tend to come from a relatively small number of actual trades or small number of years in this business. I mean, that seems to have been your experience as well, right? That the real profits are kind of concentrated into a fairly short time span, and the rest of the time it's just a grind.
Yeah, it's about, staying alive, staying in the game. That's the thing. And between 2008, 2020, yes, there was a couple, we had Euro debt crash. There was a couple of little spikes in volatility, but they were very brief and nothing like 2000. So we were, there was 12 years, let's say, between, these big spikes in volatility. So, and a lot of traders, of course, didn't make it. So yeah, the key is, have a way to grind out profits when the market's slow, or, don't lose, again, be cautious, but sooner or later, those opportunities will arise. It may be a huge spurt of volatility in the market, or it could just be one trade. It could be a flash crash. It could be, whatever your strategy. There'd be that one super amazing setup.
Yeah.
And bang, you can make, in 1 second or one trade, you can make more than, most people make in years. So yeah, that's the way trading is. It is. Who knows? Right now for me, trading is slow, but as a trader, you have hope. I mean, tomorrow or today, could be the greatest trading day
Yeah.
ever.
Yeah.
Who knows what's going to happen, but you have to be there to take advantage of it.
Yeah.
If you blow out your account, there's 0% chance of it. And like I said, I've seen traders who are awful traders make millions. And I've also seen guys blow out their account, right before, let's say, the COVID volatility or 2008. And these guys would have been millionaires if they could have you know, just survived another, day or weeks or months, So
Yeah.
that's the key. So you have to have a way to survive the tough times, and then when the good times hit, be ready, be prepared, have the strategies, and take advantage of it. And then
Yeah.
like a bear hibernating. When it's
Yeah. Yeah.
gorge, eat all you can to get as fat as you can. Get that wallet as fat as you can, because there could be a long winter.
Yeah. 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 I guess it's like, yeah, you use the bear analogy. I think of an elephant hunting. You want to have
Yeah.
your big elephant gun loaded and ready and aimed, so that when the elephant does walk past, then you're ready to pull the trigger. But if you're not ready when that opportunity comes walking by, then you're not going to take advantage of it. The other thing else, I guess, also to allude back to your gambling, is to say a great saying in the market is if you don't, what if you lose all your chips? No, what if you don't bet? You can't win. But if you lose all your chips, you can't bet. And
Yeah.
and
No.
and
Yeah. I mean, and that's the thing. It's tough. Yeah, and I've seen it. I write in the book. I've seen traders who I've seen, my office in Texas. There'd be guys who come in like 2 or 3 times a year for like a quad witchin or something like that. And it seemed like it worked. They go in, work 15 minutes and make a bunch of money. But you also, like I said, you can't. It's so tough to sit at that table and not do anything. And again, that's the hardest thing about trading, is sitting there and waiting, and keeping the hands off the keys and not doing that trade. But on the flip side, you also, trading is skills, and you need to sharpen the skills, and you need to be ready for when these trades hit. And if you haven't traded, if you don't know what, if the skills are rusty, like you said, if you haven't been hunting,
yeah,
then you might not be able to shoot that elephant, or
yeah,
or take advantage of it. So there's kind of a mixer. Yes, you have to be disciplined and not trade and not blow up your account, but you also have to build your skills, and you have to have the strategy, and you have to be ready and prepared for when this trade this trade happens, or when the dealer has a certain hand. You have to be
yeah,
ready to go all in if necessary.
for sure, for sure. Um, so all right, so you've gone through the highs and whatever, the lows. You've talked about the lows, but then it all came right, or started to come right again. You said about 3 or 4 years ago, it was during the COVID pandemic, right? And things started to turn up for you. I mean, first question is, I guess, how did you have the mental fortitude to go through such a significant drop and be in such dire straits, to still then actually come back and fight another day? That's a brilliant story of recovery in itself. But what actually went right afterwards then to kind of pull you out of the hole?
Yeah, I mean, again, a lot of it's just survival instincts. I think, again, like I said, unfortunately, I didn't have, my only option, when I wasn't making any money, I mean, literally dead broke, didn't own a single thing, and I couldn't find a job, so I was, like I said, teaching English for $10 an hour, and I figured, okay, this is not, I'm not, this is not going to work, this is not going to survive. And I have two daughters, and it's like, I have to. There's no option, like, I've got to do this. I've got to fight. And I knew I could make money trading. I knew there was still edge out there in the market. It's just I had to get my head on straight.
Yeah.
And that's the thing, is like, it's tough to get your head on straight when you're dead broke. You have no confidence. Your wife's left you. You're living in a foreign land where you don't know one. You don't have a place to live. You're working at the job for $10. I mean, again, it's like, oh, now, because trading is, it's all about your mindset. So yeah, I mean, there was a challenge, and trading is that loop. It's like, when you lose your confidence, you trade worse, and then you
Yeah.
lose more money, and then you lose more money, and then your confidence is worse, and you kind of get in that. So I was like, I got to break out of that. So, I slowly, got my discipline back, traded easy, found a strategy that suited my style where there was edge, and just did that. I was just, making, so say a few thousand or so dollars a month, just grinding out small profits, getting my confidence back, getting my skills back. And, I was just, again, just waiting. Hopefully, something would happen. Of course, it's hard to predict global pandemics or anything like that. But, when 2020 hit, I was, just surviving, let's say,
Yeah.
like getting by, again, I just trying to grind out profits. I was making money every single month. If you're a good scalper with a good strategy, there's, you should make money consistently. And I was doing that, but the strategy I had wasn't scalable. So, I was happy making, $5,000-6,000 a month, which, I was living in Poland, which,
Yeah. That's good
provided
enough.
me, but you don't get into trading and make $5,000 a month. So,
Yeah.
yeah, I was waiting and, trying, but trading a lot better. And then, yeah, as I'm sure as you remember, it was kind of, you started hearing about, this pandemic in China, and then it just snowballed. And all of a sudden, in that March 2020, it was just like, bang, this volatility hit the market. And all of a sudden, these glitch strategies just came alive. Like even like I went back to kind of doing these like lagging strategies, like that 3M. I was just trading gold stocks off gold, and there was, inefficiencies, and the market was wild, and the algos were, plugs were being pulled, and it was just whoa. There was a couple, when that first Tuesday, it was just I was locked inside trading for like 12 hours a day, just going nuts because I wasn't used to it. I was trading, a couple hours a day.
Yeah.
And all of a sudden it's just, I was trading, maybe basically like 100 times more shares in a week than I was in, months prior. So it was a bit, it was a big, it was a big kind of,
Yeah.
and I
Yeah.
was, and once the market closed, I was, it was on Twitter, and I couldn't think, and it was wild, but I knew, like we were saying, this is the good times. I have to kill it. I have to make money. I have to build that bank account out, because who knows when we'll get this again. So I was, I was plugged in, and I was going for it, and I had the best trading results in my career. And 2020 was a really good. There's a lot of opportunities, and then fortunately, 2021 was also a good trading year. It was, the volatility died down a bit, but you had, all these kind of game stocks, and we had these SPACs that were going crazy, and this QE was just driving, everything was nuts. It was wild. So it was, it was, we were, I was lucky. I was fortunate. It was, I say I was fortunate. Of course, unfortunately, trading, our gain is others' pain. While everyone else is suffering through COVID, we're kind of like, traders like, this is amazing trading.
Yeah. Yeah.
Same with 2008. And that's that's kind of the way it works. Volatility typically comes when bad things happen. Whether it's COVID or financial crisis or wars or terrorist attacks. But that's that's kind of the life of the trader. So yeah, it was, and it was a, it was 2 years of just hardcore trading. I was, before that I was writing this book, and I was doing everything, and it was just like, okay, after the book, I need to do this, and I need to trade. And it changed the book, definitely. Went for me, the original ending was me, grinding away, trying to survive, what will happen next, to let's say a happier ending, at least for my trading. And yeah, that was great. It was really good trading.
Yeah.
And then, in the last couple of years, it's kind of gone back again. So we're back in survival type mode. But
I was going to say, because I mean, right now that where we are at the moment, the volatility is back down. It's quite, I mean, geez, the last 2 days that I've watched on the S&P 500, it's almost like the market's it's stuck. It's hardly moving at all. So I guess in these types of times, it's not ideal for your strategy then, if there's not much volatility around. So are you more cautious now?
Yeah, of course. I mean, again, first of all, I'm more cautious because I still, I'm still scarred from this,
Yeah.
when I'm, the hell I went through earlier. I do not want to go through that again. That's in the back. Do not, so again, that's made me cautious, of course. But yeah, the market, it's tough. I mean, from most of the equity traders and futures traders I talk to, it's a tough year. The volatility's down. And unfortunately, a lot of us still have this mindset of like, go for it. This is a main trade. No, like I said, this is one of the periods you have to be cautious. You know,
Yeah.
Evaluate the market. Look for something. Lower the size. Don't blow out the account.
Yeah. Yeah.
Don't do anything stupid, because sooner or later there will be, another volatility, or another volatility spike, or some other sector will go crazy, or there'll be a flash crash, or just something that, and if not for just for my strategy, whatever you trade, there's always, of course, there's always hope, but
Yeah.
it's tough when the trading's rough.
Yeah.
You still, I've been 23 years and I'm still like, oh man, this is it. How am I ever going to make money? You still go through these painful kind of cycles, but
Yeah.
that's trading. Yeah.
That's trading, ups and downs. Yeah. Yeah. We're getting towards the end of our time. But I guess if you had to just give like one or two bits of advice to youngsters wanting to go out trading, and let's say you were, young David Hale, you're 20 years old, you could go back and have a conversation with him. What advice would you give him?
Don't do it. No. No. I mean, to be honest, I mean, again, I think that is good advice for a lot of people. If you're not, make sure, if you're going to get into trading, make sure you have the financial backing. You have, something to fall back on. Of course, you have some skills. And, don't do it unless you have the right training or education, or someone that, and again, just some random guy on Twitter is not education. Make sure you have proper support, proper backing, proper training. And, you still realize it's going to be, of course, it's going to be a struggle. Even if you have the best training, you have the best background, you have all these skills, it's a brutal, brutal industry. But, it is possible. It is possible. It's still, even the markets right now, the market stuff, there's still guys out there making money. There's still money, there's still glitches in certain markets. There's still opportunities out there. But again, you have to have the right training. You have to have the right mindset. And you have to have that mindset of, big thing is, I will do whatever it takes to make money trading. A lot of traders come in and go, well, I'm going to do it this way. I have this gift of picking what way stocks are going to go up. I think Tesla's going up. I feel like that. No. You have to find where the edge is.
Yeah.
And again, unfortunately, it's not necessarily usually the chosen path.
Yeah.
This glitch style of trading I'm talking about. It's not necessarily glamorous or sexy. Yeah. It's not.
Yeah.
I can't go on Twitter and go, oh yeah, I picked the bottom of Tesla. I'm such a badass. It's more, you're getting down and dirty. You're scavenging. You're picking up scraps. That's where I find the most edge and the most inefficiencies, and where you can make the money. So as a trader, you have to be willing to do that. I'm going to do whatever it takes to make money, whether it means trading this style, trading this market, trading this hour. If it means waking up at 3 a.m. because there's more edge, I'll do that. And especially as a new trader, you have to do that. You have to get the screen time and you have to bust your ass. If you're not willing to do that, then don't do it.
Yeah.
Do it now. Once you make money, once you make your millions, you don't have to do that. You can do whatever you want, but you have to earn the privilege. So that's a big thing. You have to find the easiest way to succeed if you want to succeed.
Right. Okay. Brilliant. Fantastic. Well, David, we're out of time, so I'm going to have to wrap it up, but it's been an absolute pleasure and a privilege to speak to you. Just for viewers, again, I'm going to just show the book on the video so that they can see what it looks like. Yeah. Cash Rules, Reminiscences of a Day Trader by David Hale. Go and get yourself a copy of that. It's brilliant reading. I really enjoyed it. I couldn't put it down.
Yeah.
So that's the book.
Only in Amazon, I'll say. Unfortunately, this is self-published.
Yes.
So it's available on Amazon. So
it's available on Amazon, and you can get it as is it on Kindle as well?
Yeah, you can get the ebook or paperback or hardback.
All right. So yeah, I mean, I bought the paperback. It's not a thick book. It's quite quick to read. I think it's 180 pages. So, but I mean, it's great. It's great to read, and I can highly, highly recommend it. It's entertaining. It's educational. It's just very raw and real. And I couldn't put it down. So, highly recommend listeners to read it. And beside the book, where else can they follow you? On Twitter, I guess.
Yeah. Well, thanks for those kind words about the book. Yeah, I'm on Twitter at Cream Trader, and also a website where I have some more information. If you're interested in these glitches, I also have some information. Of course, the book's probably your best primer, but David-Hale.com is, I have a little website with some resources there. But yeah, I'm happy to, I'm out there. I'm happy to network with traders and, discuss glitches and the honest truths of trading and all this good stuff. So
magic. All right, David. Well, it's been a pleasure and a privilege to speak to you. So thanks for your time. I've really enjoyed this.
Well, thank you. Thanks for having me.
Cheers. Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.